the mistake people make is they think they're buying stocks. They're not. They should be thinking about buying portfolios, okay? Because that's what gives you the ability to own something with a bit more risk and volatility and return with something a bit more stable, and balance those two things out so that you can get closer to those kinds of numbers, right? You can take a picture of this if you wish. So again, solving that problem of what do I do with my portfolio? How do I know when to exit? This is what I give my clients. You can use this if you wish, okay? I don't think, again, for private clients, I don't think I'm revealing any deep down secrets on this, okay? That, I think, when clients have that in front of them and go, right, I know what to do, I can be calm. I've got my portfolio, and now I know what to do. I don't need to keep staring at the market. I can go and enjoy summer. Pension sorted. Tick that box. Enjoy summer. Tick that box. All done. Sorted. Okay? Again, like I said, take a picture. Mick, I'll answer your question in just a second. Kay's asked, trading 212. Well, trading 212, compare it with the others. I mean, trading 212, AJ Bell, Hargreaves Lansdown, Free Trade, they're all much of a muchness. So they're all the same. Hedge against US government debt. Manu, what exactly are you worried about? We're going to get into the realms of, you don't need to worry about US government debt, okay? And if you think I'm wrong, the best way to hedge against US government debt is find a new planet to live on. Have you seen the data of how big that country is? If it goes under, yeah, we're all going to be going and living in caves. Stock up on water, I guess. Okay, so let's look at some more of these solutions in some more of the Q&A. Let's do the market, actually. S&P 500, this is where we are. Now, the worry when this was happening, these are average prices. Short and medium-term average prices is what is represented by the MACD there. And my worry was it was going to be like this. It could still be like this and do this. Okay, it could still do what it did there because the pattern was very similar and still is rather similar. Okay, so don't think, oh yeah, we can just gung-ho. Wife and son are in the S&P 500. They're in what I call the Quality 5 Plus, which is about 37 odd companies. I edged into those slowly, slower than them. So I ended up paying an insurance premium by being out and missing this. Also meant I miss that bit. Okay, so I had to sell there and buy back more expensive, which is the insurance cost I was willing to pay. Well, not with all the stocks. JP Morgan, Goldman Sachs just held on throughout it. But the point is, if you don't want to pay the insurance premium, that's fine, as long as the market does this. If it does this, then you've got to suffer the pain for a long period of time, and that's my concern. I didn't want to be stuck in the market for 2 years in case it went and did that. So where we are, it's a bit overbought, so cautiously entering